All right, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you guys. Good to be here. Mark, Bernard, Deepesh, Premendra, Chintan, Eileen, great to see you guys this morning. So, we are on the eve of the FOMC policy decision, and we are heading into the final few days of July trade. Look, it becomes a very hairy trading condition for near-term traders like us. The very start of the month, the very end of the month, it's a tricky time period for intraday trading. That being said, there are some very interesting opportunities. I also want to point out some opportunities that we've been looking at that I think we may want to steer away from. Some of those are in the dollar crosses that actually some of you are asking about right now. So keep your questions coming in the question box. There is no faux pas, so feel free to throw out any questions that you have on strategy or any of the pairs that you might be looking at. We'll be more than happy to take a look into those. So before we start the session, guys, a quick look at the relative performance for the greenback. We're split right down the middle. Kiwi dollar, by the way, which is interestingly approaching a very critical area of resistance, up 0.96% so far on the session. You also have Aussie with a 0.56% advance. Not so compelling on the Aussie, even from a setup standpoint. We'll go over that briefly. I don't really want to even look at the Aussie, but I'll show it to you. Kiwi is a little bit more what's interest for me. And the CAD, I see a lot of you asking about the dollar CAD. That's coming into an area of resistance. We've seen the initial pullback here, but I'm waiting for a specific level to give out that'll give me the conviction to play the reversal. British pound has been a mess. The pound versus the yen is still the likely player for me. That saw an upside stretch in overnight trade. Euro with a little snapback after yesterday's breakout through the highs. So just looking really quickly, guys, at the dollar index here, we came right into initial support, 11,985. This is a basic 236 off of the advance from the lows. More importantly, this is really the region that you have to clear, is that median line to the downside to mark some sort of more, what's the word I want to say, significant correction to the downside here for the dollar. So you might see some more chop sideways. Remember, we're heading into the FOMC. You're not likely to see a major break of resistance or support heading into that interest rate decision. So keep that in mind, guys. It's very important to keep in mind what's on the horizon. Traders are not going to make a major break or push a major break of resistance or support right ahead of an interest rate decision. Granted that this decision specifically doesn't really hold that much emphasis for us. Sorry about that, guys, at the mic. Just because we've already gotten a plethora of comments from her during last week's or the previous week's Humphrey Hawkins testimony, where she was pressed on all different matters. And I went over that briefly yesterday in the webinar on Daily FX. But we're not likely to get any material shift. What you hear on the headlines and what you've been hearing from some of the research from the banks is that what they're looking for is more of the relay, meaning that they're beginning to prep the markets for an eventual rate hike at the next meeting. This is all rhetoric, guys. This is all nonsense. At the end of the day, it's likely to be a standard pat interest rate decision. Heading to the close of the month, the key support we'll be watching, 11,985. A downside break of this region, and you're looking for a drop right here. You have the 100-day moving average, which comes in around 11,932. You have the 38.2, which comes in around 11,937. And even if we get a new high here, an extension off of that would likely give you 100 somewhere down here. So too close to tell. Here's what the 30-minute looks like for the dollar index. We haven't invalidated the long side of the trade yet. Okay, so this is what we've been looking at for the last couple of days. These were on yesterday's radar charts. So if you check out the radar charts, here's what we were looking at yesterday. And we highlighted the fact that the bearish invalidation level is still up at that 12,037 mark. Okay. So the fact that we got a pop higher off of that support confluence, not too concerning for me. Depending on where we end the day, we might want to bring that down again along that upper median line parallel. If we do hold that 12,020 level, we might want to bring down the bullish or the bearish invalidation level to that. I'll let you know on Twitter if we do decide to reduce that. But as it stands right now, that's still the major key resistance you need to respect for the greenback heading into the U.S. session. Major key support, same level, okay? 11,985, 11,980. At this point, you have the near-term median line off the high, that median line off the low, which is right here, and even last week's stretch low. Okay, right around that region. Mike, why do you think sterling yen will go down? Raj, we'll go over that in a moment. The setup is there, man. It's not what I think about the pair, Raj. It's just about the technical setup. Okay, so I'll go over that in a moment. I'm actually pretty constructive the pound in general, long run, because I do think that the BOE, as I've told you guys many times, is probably next to the Fed the most prepped to begin normalizing interest rates. So it's not about what I think; it's about what the technical setup says, right, Raj? So we'll look at that in a moment. But the levels for the dollar index have not changed. So before we move on, again, I'd just like to give a nice brief overview here of the dollar relative performance and what we're looking at on the index. Any questions on that? So heading into the U.S. session, you could see some more upside for the dollar. You'd look for some resistance near that upper median line parallel. The 12,037 mark is going to be the bearish invalidation level. If that gives out, you'd basically be looking for the high day close. Or excuse me, before that, you have the reversal close right here, which comes in at 12,071. The high day close for the year comes in way up at 12,123. All right. Is U.S. oil part of the U.S. dollar? I guess not, just not sure. No, Mark, it's not. No, the U.S. dollar is, at its inception, was an equally weighted euro, Aussie, sterling, yen. Just the four most liquid, four most traded currencies against the greenback. All right, cool, Mark. Okay, so now that we got our dollar bearings, as it were, straight, kind of have a gauge of an idea, looking for a break below 980 to confirm a dollar correction, expecting to see a little bit more upside maybe in U.S. trade. We want to see that capped, below 12,037. All right, so where does that take us? First thing I want to go over real quick is the scalp setup from yesterday, and that was really the Aussie Kiwi, and this has really been the only thing I'm trading, guys. I'm a little coy. I did dabble yesterday a little bit in one of the dollar crosses on the euro trade on the breakout, but I'm kind of coy to pull away from some of the dollar crosses. Aussie Kiwi has been really clean, really clean. We've been following this one for weeks now. So here's what Aussie Kiwi looks like on the daily. Here's what we looked like yesterday. Okay, so the major area of support that you're coming into here was 109.65. Okay, you have 100% extension off the high. You had the median line off the high as well coming into that region. More importantly, aside from that soft target, is right here. 109.20, 109.12 is what I want to really pay attention to. The 236 not really as important as the high stretch that we made here for the June opening range, came at 109.12. And that's really what we're looking at today is a little bit more critical area of support. If you guys remember, I don't know if most of you were in the webinar yesterday on Daily FX. I kind of went over the breakdown of how we played this, but the bottom line is this is where you'd expect to see a little bit more of a concerted support bounce, okay? The slope lines that we've been following here, I mean, this slope line specifically comes off of the 2014 January low. Well, let me just show you in the real chart. Okay, right here. So you can see pivot, 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 break, resistance, 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 break, support. Well, it just so happens that right now you have the S1 monthly pivot, which again, I don't stress monthly pivots, but when they coincide with trend lines, major fibs, median lines, what have you, more significant. Okay? And then the median line off the high. So that comes in just below the low that we made so far today. So you could get a stretch lower. You're looking at near-term momentum. It does look like it's waning. I'm no longer holding short as a disclaimer here, but you look for some near-term support or look for a possible rebound in Aussie Key here. Here's what it looks like on the 30-minute. So super clean. Let me show that to you on here. Here's what we looked at yesterday. We were just coming into that 109.64 target, which was the 100% extension. We finally got through that. Again, momentum snapped right back above 30. And we've been in la-la land ever since, just hovering here. So there's been not really many plays. There was one other opportunity to get short early in, ahead of the Asia Open. I was looking at it in the 5-minute chart earlier today. Let me show it to you. Okay, here it is. So here's what it looks like on the 5-minute chart. This was the original entry that would have been, or that was the ideal entry for the Aussie Key short yesterday. Okay, so you had a very tight Sydney. Tokyo didn't really give you an opening range. This was practically like 10 minutes into Tokyo trade, but the Sydney opening range break with a nice trigger break in momentum after holding 60 resistance. Ideal scenario. Ideal scenario. Real tight stop. You're playing the break below 110, stop at 110.13. You're looking for 27 pips. Well underway. Another opportunity arose, like I said, deep into the Asia session ahead of the European Open with this rally. Yet another attempt to break through 16 momentum. Failure. Break. Tight stop. You're looking for 27 pips. Well above that. This is the last trigger that I gave out here. Again, when I woke up this morning, this is what I was looking at. It was a tight trigger, and then I came back and tested it as resistance, so inevitably actually would have worked. It would have been an operative trigger. But here you are testing 40 and holding 40 as support as you open up the U.S. range. So I'm a little bit concerned that you might see that material rebound, like I was saying, off of this region. Basic trendline resistance dating back to that Thursday, Friday high is going to be our near-term sort of scratch the short side, wait for the rebound. At this point, yesterday, if you noted, we brought down the bearish invalidation level. I'd like to bring that down now to the weekly opening range high, essentially, or just above, maybe 111.25. I'm sorry, you're loaded to 110.47, which was the July low day close. Right, let me highlight that. Okay. So the July low day close, which on the daily chart looks like this. Okay, that dashed line there. The previous low day close, we're obviously in a new low. So as long as you stay below that, if you see a rally into that, I'll be looking for shorts. But right now, on the back of this stretch here, this now completes 1, 2, 3. I guess if you count that doji as nothing, we've had a 3-day stretch to the downside. If today closes, and was specifically if we get into here, I'd actually be interested in possibly looking for a long exposure down into that 109.20, 109.15 region for a long scalp. But this is pretty critical here for Aussie Key. Pretty critical. And even here, actually, guys, if we bring this into a line chart, it's tight. It is slightly lower, but that's some pretty radical divergence as well. Watch for a possible break above this. You could see the recovery. Again, you'd look for a possible short exposure near 110.47. This is the major key support you need to respect for Aussie Key heading into U.S. trade today. Any questions on this? And that 40 hold there, again, is suggestive that you could have more upside potential here for the near term. Okay, let's jump into some of the pairs that you guys are interested in. I do see dollar CAD, sterling dollar. Someone had a question on gold? Aussie yen for Raj. Sure. Okay, first of all, I'll just touch on sterling. I'm not really a fan of it here. If you guys remember, we went over this yesterday. Here's what sterling dollar looks like on the daily, and the fact that the daily is getting messy is when I start to shy away. Clarity is everything in trading. If you don't have the clarity, guys, that's nothing to be ashamed of or nothing to be confused or upset about. Very simple. You take a step back. Omit that pair for now. Let it pan out. Let it chop up people right and left. And then when you get some more clarity on it, we'll bring it back into focus. That's what's happening right now for me with the British pound, specifically versus the dollar. You know, the outside reversal day that we had here was a pretty compelling case to try to press the shorts. We had a couple of nice short trades off of that. We wanted to stay bearish below that confluence region right around 55.50. Yesterday we probed through and closed right below it, so it still looked good. And then today here again, pushing through it again. In a trade like this, you're likely to go sideways. You got the GDP data out of UK earlier today, right in line with expectations. Quarter on quarter, 0.7%. Year on year, 2.6. There's no surprise on that front. And, I just think this thing's going to drift for a little bit more. At the end of the day, here's what the near-term chart. Let me just show you this. This is where, if you have no clarity in the daily, this is going to be even more confusing. But the broader structure we were working with that you're looking at in the daily chart is this. And the resistance was holding nicely yesterday. We counted this as a false break. And specifically on the outside reversal day, it took out the entire weekly range high and broke the lows. So it was a very clear reversal play to the downside. This break here confused things. You might have seen Jamie add this median line structure, which looks like you're coming in some resistance right now. Long story short, the momentum signature is still actually pretty constructive. Rebound ahead of 40, rebound ahead of 40. You are getting divergence into the highs, which for me, again, starts to signal look lower. So I would actually be still looking for some sort of short near this region, but I just don't have any conviction for me to actually press the trade. Let me just see if there's any Fibonacci relations to that high. Yeah, I'll bet you that 764 comes right in. Not even. Let's see what it looks like in the 5-minute. Yeah, there could be a material shift in momentum here. Just radical price action here. Even if you look at the Sydney-Tokyo opening ranges, which broke to the downside late in the session, you saw a massive reversal, took out the highs, okay? And now here we are again sitting basically at the former Tokyo opening range highs. So if you see momentum start to collapse below 40, specifically if, it's a messy setup, guys. It's a messy setup, but you'd need to see even 40 start to break here on the 30-minute chart too, but maybe a compelling opening range break to the downside. You're not near a major high. You're not near a major low. So Mark, for this one, I'd still be on the sidelines, guys. I still wouldn't be messing with it. If it does break, where are the targets? Raj, if it breaks in which direction? If it breaks to the downside? A downside break, I'd still be looking for the major, yeah, he says, yeah. So I'd still be looking for a soft target at 55.40, 55.50, which was that level that we were looking at in the daily chart a moment ago. Right at that crosshair where both of those median lines stretched and where we closed essentially yesterday. And then more importantly, it'd be this region here. Let me snap these lines for you real quick. So let me amend this real quick. Basic trendline support off the lows. Actually, I could probably just copy this. The 155 handle. The 55.50, 55.40 zone we just talked about. It's basically this zone. And this would be sort of your breakout play, okay? On a topside break, your easy target is basically going to be last week's high, which coincides with the previous week's high, and sort of where we peaked out in the last 3 attempts to break higher. So it's not a beautiful setup. It's not a pretty setup, but those are the levels I'd be looking at if I felt compelled to trade this. By the way, anyone who's new to the room here, guys, keep in mind that you can always take a quick snapshot of any of the charts you see presented on the GoToWebinar webinars here. Feel free to click the camera button in the top right-hand corner of your GoToWebinar screen if you need these charts for future reference. Mark says, a sliding parallel in the sterling or not a fan? Nice. Should have looked at the 30-minute and the RSI momentum signature, Mark says. Thanks. For the sterling, yeah, you could take a sliding parallel. I know what you're talking about off of this slope is what I'm assuming that you're looking at. So you could do something like this, and that would suggest that basically you're at resistance again. And in fact, that actually was what we were looking at with the euro, and that's what gave us the euro breakout. right? Euro did the same exact thing. In fact, Euro slope is ridiculous because this is the same slope that the decline has been following since the May decline. We ran into a June high, same slope. The parallel, right? Again, capped the advance and the breakout. So it's been it can be very fruitful, Mark. I don't want to stop you from doing that. Sliding parallels are a huge part of our analysis, absolutely. But for the pound specifically, on a breakout like this, the reason I don't feel as comfortable trying this is because you could have done that here, right? You could have done that here. You could have done that here. You could have done that here. You know what I'm saying? Every single new high starts sliding the parallel to a new one, sliding the parallel to a new one. And then all of a sudden now you're just building resistance that's not there. So for me to be very confident to try to see if a sliding parallel actually has merit, is I need to have a little bit more confidence in that high being something technically significant. And there isn't, right? There's no peak in momentum. There's no divergence in momentum to give me some sort of high here. It's not, the high for the month. It's in fact shy of the previous other highs. So I wouldn't have as much confidence in that kind of sliding parallel, just as per my personal analysis. So could be something to watch for. And in general, as I said before, we do have the near-term upper median line parallel, which is there anyway, right, Mark? So try to keep it as objective as possible to what price action is doing. Make sense? He says, yeah, I see what you mean. All right, awesome. Good point, Mark. Great question, man. And it's important to keep in mind, guys, the type of analysis that we're trying to do or the type of trades that you're looking to execute. That's really the name of the game. For a short-term trader like me, I'll take a rebound against resistance. I just need to make sure there's a little bit more concrete measures in play. So if we do break below this region, for me, this is what I'm going to count as the initial opening range high for the week. We defended it yesterday, or what is this, earlier this morning. Break below that level would suggest, okay, cool. I think we're done with the upside here. Look for 155, and this is the break, okay, that would give us the broader validation for the turn in the sterling. Make sense? And in that scenario, again, we're looking way ahead of the game here, guys. But in the scenario that we do break this low, the first thing I'll run to is a quick extension off of this move. And such a play gives you 100. Oh, well, actually, let me keep that 618 real quick. A quick look at it gives you a 618 right at 54.90, so right around that 55 handle we just highlighted, and the weekly low. Makes sense. And the 100 comes in at 54.12, which is right around that level, pivot level that we highlighted at 54.20. I'd rather have my target on the inside, right? So again, too early to tell because I have no clue that this is a concerted high. Like I said, the divergence here does bode well for this at least being a near-term high that you want to respect. Invalidation 56.20. All right. Mark Haverman says, then 150. He says if it breaks. That's a long way down, but there is actually a pretty huge confluence down there. Who knows? Any questions on the pound, guys? Again, I'm going to jump into the pound sterling. I think it's a little bit more compelling of a case. A little bit richer of a trade because the ATR is much larger than the 116 pips or 115 pips that you're looking at here with sterling dollar. And a little bit more sheltered, shall we say, from the FOMC event risk that you're heading into tomorrow. Obviously, the yen has very strong correlations, at least with what you're seeing in yields. But sterling yen is something that I'll be looking at a little bit more attentively for the pound crosses. So, here's what we're looking at with sterling yen. Excuse me. The major key pivot, or I don't want to say pivot, but the pivot's there. The major key level that initially turned us on the short side on this was right here. 192.25, 192.36 was the monthly open. You had the monthly pivot there as well. You had the median line structure off the lows for the year. And a break below that, or coming into this region, you were looking at momentum on the daily chart, still holding that trigger resistance. This has been tested 1, 2, 3. Looks like we're fourth time now. Okay. The daily doesn't say much. It shows that you could have a little bit more room stretched to the upside at 93.60, but even if it were to rally into that, you're still looking at a downward sloping trend. Here's what it looks like on the 30-minute. And this is why it's a little bit more concerning for me near term. So the open for the week is right here. We opened the week. It looks like we're holding in this really tight, actually Jamie's the one who found this one, really tight pitchfork to the downside. We went over this in the webinar yesterday as we were testing this confluence region. So the major median line off the highs, coming into support at the lower median line parallel. Embedded median lines off the highs. You had the median line there off the high, which was also coinciding there. And even into this low, you're starting to get some divergence. We pointed that out yesterday. So the game plan, and if you guys were in the webinar, we even talked about, listen, even if this thing rallies into 109, well, what level is that? The 100%? 191.90, right? That might be another opportunity to take another short trade on this. You're looking for about 50 pips, right? And someone in the webinar asked, Mike, where would your stop be in such a scenario if it does rally into that confluence region, which obviously came way ahead of time. But the stop would have been against the highs. Well, lo and behold, that's exactly what it rallied into. And if your stop was above that high, you probably just got missed getting stopped out of this trade by like a pip or so. And it turned around and inevitably did give us a 50 pip drop, right? Here's where things get interesting. You see a 60 break in momentum as it breaks the opening range high for the week. That invalidates our short side bias, okay? And it just so happens that that rally also took you through the monthly open at 109, at 192.36. So once that condition exists, you're no longer looking for the short side of sterling yen. And like I said, you could still see that rally into trendline resistance, 193.59, 193.60. And this might be an area of which, if you get a compelling short trigger, sure, it might be a nice trade. That being said, it's sort of the same thing that we're looking at with the British pound, which is why for me, I'd be much more compelling. I'd be much more, what's the word? Or I'd be less reluctant to take this trade and be long the yen than I would jumping into a pound dollar short and being long the dollar heading into the FOMC interest rate decision tomorrow. Does that make sense, guys? Sterling yen. Hi, Michael. Are these the same fib levels you published earlier last week? I might have adjusted them. So, Graham, I will always adjust price action to, new highs, new lows in price. The retracement is exactly the same. That hasn't changed. The extension, I don't think has changed either. Yeah, I think all these levels should be pretty much the same. Yep. Graham says, thanks. More than welcome, my man. More than welcome. So, as it stands right now, like I said, we could see a push into that trendline resistance. We'll look for a possible entry there. The major resistance level is going to be not only the reversal day close, but it also happens to be the 2015 high day close, and that's at 194.43. That level gives out, look for 195.86, look for 197. Sterling yen's my trade of the year. I think this thing's going to, blow through the highs at some point. But right now, you're still at risk below that trendline resistance. It's still going to be my favorite sterling, scalp, and it's a much wider range scalp. Like I said, sterling dollar, you're looking at 27 pips. On sterling yen, you're looking at about 50 pips per scalp, almost double. Almost double. A quick retracement off this high. Graham, this isn't on that because we didn't have this low achieved, but a quick retracement off the highs. Just want to peep this real quick too. Puts you exactly at the 618 right now with the high we just made. And that's another thing I'll be checking out as we head into the US Open. And the 93.60, we were just talking about that level where that trend line is. Boom. It's going to be near-term bearish invalidation. Resistance. Don't even call it bearish invalidation because we got the invalidation for the bearish was with that break of the monthly open. So look for resistance on a break of this level up at 93.65, 93.60. Raj says, are you short at the moment? No, I'm not short at the moment. Nope. I actually got stopped out at break even on half of the trade with this. So yesterday when that guest in the webinar was asking about that rally, I was actually looking at the same thing. I was hoping that we would get a rally so I can get that entry, because I actually missed the entry last night, or on Sunday night, when Jamie issued the entry on SB. I actually missed that entry. I thought it was a perfect entry right here. From a scalping standpoint, we would have been out at the 50 pips. So I didn't actually get that entry. So on the rally back into that region, I actually did jump into a short as momentum held 60 here. Almost got scared the wits out of me with that rally into the highs that held. We inevitably took half the trade at 50 pips, and then we got stopped out at break even on the rest of the rally here. So I'm not in anything right now, but we'll be looking to see if we get that stretch into that region over here, or we break back below the monthly open. If you make it back below the monthly open, I think that's a compelling case, especially with the median line there, that you would be looking for a resumption for a move back to the downside. It was a perfect entry, but then it rallied back. LOL, so choppy. Yeah, Raj, it gets kind of frustrating sometimes, right? And guys, these are the conditions that the market grants us, heading into the end of the month, major event risk on tap in 24 hours, happens. Brush yourself off, and you look for more opportunities. They will always offer more opportunities, as the market does. Any questions on sterling yen before we move off? All right. Dollar CAD. I will not forget. There's a lot of questions on dollar CAD, Mark. I see you. Okay, so lots of questions here. Bernard had a question on dollar CAD earlier as well. Mark Haverman, I see you. 30-minute now breaking RSI. Okay, so dollar CAD, I tweeted this chart last night. I hope you guys caught it. I just wanted to highlight one thing. I'm not on the short side yet, just as a disclaimer. Probably should be, but the major level I just wanted to highlight, is just the 2009 high, which is at 130.63. Scroll back here just to show you. That's the stretch high. And the massive amounts of divergence we have on those highs, with the momentum essentially flattening right ahead of 70. Now, that's not necessarily a bearish call, okay? But it does suggest that the push in the momentum, or the broader push, again, to use the same word again, push to the upside, is really starting to wane. And just because it's flatlining like this doesn't mean that it's a bearish call. Again, as long as it's above the 70 barrier, the propensity for the market to keep running is there. Here's what I was looking for. I was looking for the market to push below 70 and for us to clear this median line on a close basis, though. On a closed basis. Intraday, you might get beautiful scalps to the downside. I don't want to necessarily stop you from doing that. But for me, the reversal is sort of confirmation. The trigger, if you will be a close below this median line and momentum sub 70. Remember, the momentum signature means nothing until the candle closes on every time frame. So if you're looking at a 30-minute chart, that 30-minute candle needs to close sub the trigger or whatever you're looking at to confirm it, right? Because this line doesn't get pegged until that candle closes. So if this thing rallies through the highs, this thing will look like it never even dipped. So the beginnings of what we're looking for is starting to pan out. Again, if you look at this median line structure, specifically if you're bringing this to a closed basis, you can see that, that median line has been offering some really nice pivots in price. And on a closed basis, if we do push through, you'd expect to see some sort of near-term pullback, right? Here's what a 30-minute looks like. So we noted yesterday the bearish invalidation level is 130.53, and that's very simply the weekly opening range high. And it also coincides right now with the upper median line parallel for a proposed pitchfork. We don't know quite yet that this is in play. I have it in solid and not in dash just because this high was pips away from the upper median line parallel, and the median line itself has given us some pretty decent pivots. So I'm confident enough to work with this for now and look lower below 130.54, 130.53, which is the weekly high. So downside break, you can see here we're just on the cusp. We haven't really cleared the European lows yet. If you do, you look for the weekly low, you look for the median line but it's really a basic weekly opening range break for me. So if we do get dollar weakness, i.e. a break below the median line, the weekly low, your first target's not even until 28.73, and that's just a basic 236 off the low. I'm talking the most shallowest of corrections, right? My RSI line is too thick. I need to change that. Yeah, Mark, that's huge, dude. For sure. I know guys who do that all the time, and they'll draw a trigger line that looks something like this, in which case you can't tell if it's a break or not. So yeah, make sure you exactly, he says, yeah, make sure you're trying to be as clear as possible. But I see what you're looking at. I'm with you guys on it. It could be the makings of a nice pullback. We don't have that conviction just yet. And again, keep in mind the event risk that is forthcoming in just over 24 hours. Just want to see what this looks like real quick. Yeah, beyond the weekly low, I wouldn't even target the weekly low because it was such a stretch low, guys. If we do sort of make our way below the opening range low, this is sort of the first target I'd look at, specifically because it coincides with that median line pretty much throughout the U.S. session today into the close of U.S. trade. So that would be the first area you'd look for. And then, like I said, that basic 236 doesn't even come in until like 28.70. So we'll call it a little bit lower than that. All right. And if we do finally make a close below that median line, which you can see on the 30-minute chart, guys, even on the 30-minute for the last 3 weeks has been such a clean pivot. If we do finally make it below that, guys, be much more comfortable bringing down the bullish, or the bearish rather, invalidation level from the weekly opening range high down to this confluence region here. Save you about 20 pips down at 30.38. All right. Any questions on dollar CAD? There's a lot of guys here looking at dollar CAD. So any of you guys have any questions on what we're looking at so far? Could be the makings of a nice trade. If you get a rally into this region, I'd be very tentative to a 60 hold in momentum and a short trigger. This would be a possible nice entry here for a downside scalp. Mike, I noticed that every time you look to go short, market goes the other way or vice versa. LOL. It's like they read our minds. No, here's the thing you need to keep in mind, Raj. Don't look at it like that, man. You're going to drive yourself crazy. The market is always right. Okay? The market is always right. We are here to interpret what price action is telling us and to try to take advantage of these swings in price, right? Sometimes the swings just don't have the effort to get through. And when you get these chop price action, it just means that A, we're in limbo, or the market is flat, and we're waiting for a major release. There's something on the precipice. There's something in the docket forthcoming that the market is waiting for. And B, you got to remember what time period you're in, Raj. You're still in August trade. It's still a slow period for trade in general. People are still on vacation. Things will definitely pick up as we head towards the end of this month, and in September, you really start to see some of that liquidity start to flood back into the markets, and hopefully we get a surge in volatility again. But don't look at things like that, Raj, because it's the market's always right. Never think that the market's doing something against your position, right? So anyway, that's dollar CAD. The other thing I wanted to go through, let me check my book here. CAD, things to look for. Oh, Kiwi. Oh, goodness. Goodness. Where is my head? Kiwi dollar. Well, guys, it may be just on the precipice of making a move here. I do not want to be the one calling the breakout just yet, but it looks like we are in the midst of something, okay? The upper median line parallel dating back to the highs that we made for April. It's been A good 3-4 month stretch we've been in this formation. It has been textbook, so tight within the confines of that formation to the downside. And you're now checking the upper median line parallel as resistance. Okay, momentum's already made it through 60. We got that trigger break, which looked a little messy, but a little bit earlier in the month. Here's what I tweeted out last night. And this is a loose interpretation, and this is the way you want to play these major reversals, guys, because you don't, I mean, from a scalping standpoint, you're going to get stopped out at 22 pips. But even then, you know, there's nothing wrong with getting a great entry on a scalp, and then if you do catch one of these, you know, you kind of ride that up to the upside. But long story short, you have 3 different formations you're looking at. Here's that median line formation off the highs. Okay, it looks like we're probing through the highs right now. This is a median line formation just off the lows for the month. You're testing the median line resistance right now. This is a wider, a deader slope, we'll call it, median line formation off of the lows that we made on the 7th and on the 16th. And that median line is called into question here as well. This is the major region that we need to clear to the upside, and you'll have plenty of conviction to play the longs, I think. Momentum's already been giving that turn signal with the pullback here, finding support at 40. You saw that breakthrough here, really, really quick, corrected higher. This was a slow dribble below 40, but here we are above 60 into overbought territory. And like I said, near term, or as I said yesterday, near term, I'm looking constructive above 65.97. As crazy as that sounds, from a scalping standpoint, that's sort of what the corrective play was. Okay, and here's what it looked like yesterday. So, point in fact, you know, we didn't even make a run to the downside, and we pushed right through, and we're still struggling to get through this. If we pop through that median line, that's all the conviction I would need near term to continue to look higher. 166.66 or 66.66 is what I was looking at for resistance. Looks like we're sitting on that now. But again, remember, with these resistance breaks, if the resistance break doesn't give you that run, and you kind of see this consolidation around it, you know, get a little bit more, shy about the trade. Let this thing pan out. You probably get a pullback back into that median line. You'll play the rebound, but near term, at this point, you know, you want to stay constructive above 66.20 or that confluence region here, heading into tomorrow's open. So again, another trade that could be something super interesting. A 236 basic retracement from the decline takes you into 67.90. Lots of room. Lots of room. And another trade, guys, that would bode really well for our Aussie Kiwi setup, right? Even if the Aussie doesn't necessarily sell off, Kiwi strength should be enough to keep some pressure on that pair. Once Kiwi does break up, how far do you wait for pullback to enter? Kiwi does break up. How far do you wait for the pullback to enter on the long side, you mean, Eileen? Oh, she says yes. Right, so the obvious play would be the median line, Eileen. On the breakthrough here, you'd look to play the median line to move to the upside. Mark, did I say August? He said it's not August, not even in the States. That's right, we're in July. Did I say August? We're in the summer trading months. How about that? So we'll get closer to the August by the end of the month, by the end of the week, rather. So Eileen, the obvious play would be the median line that you're breaking through on a pop there to buy back into, or on a play like this. Like I said, if you drop into this zone, a stop against that low right there would be a nice entry if you have a long trigger to get back on the long side there. But this is the conviction break that I would need. This is really the zone I highlighted last night, but you can see we've just been riding it, right? So I don't want to really take a long into this thing right here, right now. So we'll have to see if we can get a little bit more conviction, either with a break and a pullback back into that median line or a move lower. Basically, this is the formation I want to respect near term. Does that make sense? Okay, breakouts are more difficult for me to see where to enter and not be chasing. Right. Yeah. I remember we've been working on that with you, right? So that's no problem, Eileen. Let me know. This is the formation that you want to be respecting, and you always want to be taking the positions as closest to the median lines as possible. So the longs off the median line would be the best way to enter it, or off the lower median line parallel. Shorts off the median line again, or off the upper median line parallel. Two different requests here for Aussie Yen. What's going on over there? Mike, Aussie Yen, please, I'm short now. Mark says Aussie Yen, praying for 90.90 for an epic short. Okay, looks like everyone wants to be short Aussie Yen. So that thing did start to fall apart in overnight trade and probed into a new low. I was looking at this last night, and I was really interested to see if we do actually probe into this region. Just as a disclaimer, I did put out a piece about this a couple of weeks ago. I haven't touched it since. It's been, this is not my favorite trading style. Yes, range trading makes sense, but even when that range is in a formation like this, when that range is sailing through a median line, or even this median line off the high was just getting massacred as we were sailing it through, I don't even get interested in this kind of range. So we finally made a break to the downside. We're making an outside reversal day here today, and now you're right at resistance again, guys. You're right at resistance again. This formation hasn't been the cleanest, I grant you that, but here's what it looks like on the near term. Where is my other charting package? Raj, you're not too far off resistance, man. He says 90.60. Yeah, you're not too far off resistance. Hold on one second. Here we go. Aussie Yen. Okay, so this retracement is null and void. Yeah, so here's one thing. There was definitely a strong signal here, a strong indication that this thing was going to make some sort of pull, because you had some crazy divergence all along the lows. I mean, even before that signal, look at that. Lower low, lower low, lower low, lower low. The oscillator, higher low, higher low, higher low. So this thing was getting real tired. And then last night's drop actually went for a tag of that lower median line parallel and caused a nice little bounce here. So you're checking the 38.2 at 90.50. You could see a pop higher here. I'm not sure where your stop is on this one, Raj, but you could see a pop higher here to 90.87, 90.90. I see why you're looking at that level, Mark. That makes sense. If this thing does show us a little bit more of a move, I do want to let you know one thing here, Raj. The momentum signature, the behavior has changed since the start of the week, right? He started the week well in the negative territory, turning ahead of 60, turning ahead of 60, turning ahead of 60, boom, 60 break. Now 60 support, that looks pretty constructive. So, keep that in mind. Keep that in mind. And relative performance, speaking from that standpoint, the Aussie's still up 0.62% on the session, right? So yen is down 0.38%. So even if you just take the individual relative performance against the dollar, it still would give this a little bit more of an upside oomph here heading into the U.S. trade session. Also, one other thing I do want to note, let me clean this up just a second, guys. Again, some of these levels are stale. This was the low day close for the year. You can see we kind of sailed through that, so I do want to leave that level there. But I did just want to highlight the weekly opening range high, the basic weekly opening range high. See where my cursor is? So the weekly opening range opens, you set a high, you test a low, you set a high. I would call this a test of the low and a failure, just because of the speed of which this thing recovered. And then you break through the highs and you test the highs as support. That's a basic opening range break for the week. So near term, that does give you a little bit of an upside bias. At the end of the day, a break below 90.20 on this one, Raj, would be very, very, what's the word? Would be further conviction that your trade looks pretty good. Okay, so you're looking for a break sub 90.20 to give you some more conviction that you might be on the right side near term. That being said, with what momentum is doing and the break above the weekly opening range, you are at risk for a little bit of a run here to 90.87 or change there, where that median line coincides with the 50% retracement. Okay, and that basically calls for a little bit of an overshoot here, right? Also, right next to these lows that you made last week. Make sense? He says, yeah, but now it has divergence on the 30-minute chart. It does. It does have divergence on the 30-minute chart. You're absolutely right. So price action is making a higher high. The oscillator is making a lower high. But remember, Raj, divergence is very crucial for us when it's divergence that comes into a trigger break. You don't really have a necessary trigger break here that you can use as support. I could still, I don't want to say I could, I would still possibly work with this as a trigger break. Because it offered a very nice trigger to the downside move that you saw here, and even to the upside move, actually. So this could be a nice pivot to give you that indication. But remember, divergence in and of itself is not a trigger, Raj. Things can continue to divert for a day, a week, a couple of weeks before the divergence actually triggers a decline, right? And here's an example of divergence on this. Actually, this is a daily chart, but I can show you a lot of different examples where the divergent signal is not necessarily something that's prompted right away. So here's divergence into the lows, right? Yeah, that didn't even happen until a week later, right? And even until the open of Asia trade on Sunday. So my whole point is watch the relative timing of what you're looking at. Just because you see divergence on the chart doesn't necessarily mean that the pair is going to turn over. That divergence heading into a trigger break, that divergence that breaks a resistance level, then it's operative, right? But just identifying divergence in and of itself, is not going to be the way to play that. He says, okay, thanks. No problem, man. We're making progress, Raj. I'm liking what I'm hearing. Great questions. Okay, sterling yen, we went over. Kiwi, we went over. Euro, let's touch on euro real quick. Let's go over gold and oil and take a quick look at the equity board before we close things out. We're running out of time here, so let's jump through. Euro dollar, we put out the scalp on Sunday, highlighting the levels. The levels haven't changed. I just wanted to give you a quick update on what that is doing. So if you read Sunday's post, I was personally looking lower below that sliding parallel that we talked about earlier in the session. As we opened up the week, we're right up against resistance. We noted that. We said, listen, this thing is right up against resistance to open the week. If it holds, you look lower, and you look for a break below this level here, which was highlighted on Sunday. Okay, you basically look for a break below 109.55 to show continuation to the downside. You didn't get it, and in fact, like 3 hours after that post was made, you broke right above the Sunday opening range high and that median line or the sliding parallel off the high. Cool. That invalidated the short side, plain and simple. Initial targets 110.30, 110.60. And then the 50% actually got triggered yesterday at 112.21. Okay, this was right after the webinar that we did on Daily FX. Ever since then, it's been a slow crawl meander to the downside. And here we are checking, okay, that former level 110.20, 110.29, 110.30 as support. That's 100% extension off the low. At this point, now that you have that trigger break and now that you've made an assertive move to the downside, a basic retracement will serve us best. And I wanted to update these levels here while we were together to show you. Go. At this point, we can clean up some of these levels. Don't need that. Don't need this 236 anymore. Okay. It's an ugly trigger, but we'll leave it there for now. Um, So for the Eurodollar, real quick, here's what the daily looks like, right? So here was the breakout that we saw yesterday. The first thing I wanted to point out here is one thing. You do have a momentum trigger that hasn't given out. It looked like it was trying to yesterday. It looks like it's holding as resistance right now. This push with a breakthrough 111.40, which is the open for the month, for me would signify something really important is happening. We talked about the fact that this thing pushed above 60 for the first time since the start of 2014 trade last year, specifically right into January 2014 last year. And the fact that on the pullbacks here, it's continued to find 40 support. So that being said, if we break through that, that trigger, resistance trigger, and we push through the monthly open, look for 111.95, basically the stretch high for the month, just as an initial target. But I would be looking basically for the trendline resistance there dating back to the May highs. So just as a broader picture of what could be underway. That being said, from a scalping standpoint, from near term, you stay constructive on the pair while above this region here. That's really what I'd need to break back below to get back on the bearish camp, and that's basically 110, let's call it. Yeah, that's basically it. Looking to buy pullbacks, looking for long triggers and momentum. You do see that the momentum signature has dipped below 40 for the first time so far this week. So I'm a little bit hesitant to chase anything necessarily on the long side just yet. Specifically, if price gets through this region, it would be pretty compelling back on the long side again because of the lows that we made there over the last couple of sessions, and that's like 110.50. But the levels are pretty clear, which is why I didn't highlight this as a scalp yesterday. Heading into the FOMC, you're likely to get a lot more chop. This thing could sit here for a couple of days before you make a move. But, knowing where to look, guys, knowing where to keep our attention in this environment is very, very important. Oh, right. He says, just FYI for Aussie Yen, I got a very nice shift fork on the 4-hour, really clean. Ooh, I'll take a look at that. Raj says, okay, thanks. It's rallying on the 5-minute, just rallying, I mean. You're talking about for the Euro, Raj? So, some divergence into the lows. Looks like you got a couple of triggers here that I'm trying to give out. Stop it needs below 22 at this point, but could be a nice rebound. Your target would be 50, so I don't really know how much room you have to play here. That would be the first resistance level you'd need to get through. But yeah, it could be a rebound here. I'm not really interested in playing the euro, or really, to be honest with you guys, any of the dollar crosses at this point, right ahead of the Fed. If you get a compelling case for the dollar CAD, I'd be interested in that. If you get a compelling case for the Kiwi breakthrough, I'd be interested in that. But let's just jump really quick into crude and gold. I just want to show you those levels. We are over time. Any questions on the euro dollar before we move off? I think the levels are pretty clear here, guys. Haven't really changed since the Friday update, except for that retracement we just tacked on. If you do need to take a picture of this, feel free to do so now. Okay, real quick, gold, it's been, talked about a lot last couple of days, a lot of conjecture about what could be happening, gold to, 800, $500, all that good stuff. Jamie pointed this out. I know we talked about it last week as well here in the intraday webinars, but just a quick note. Remember, keep in mind, I just also noticed that 1072 level where we bottomed out last week, where was the 2006 trendline support, the median line off the highs for 2014, that confluence region also was defined by the 100% extension from the decline off of this year's high. Okay, so if you use the high that you made there in January and the subsequent high that you made in May, you can see that the 100% two equal legs down takes you right there into 1072, and that's really the level to beat. And yesterday, again, this is weekly momentum, okay, so this will continue to change all throughout the week where this pivot point is, but yesterday you had it right at 30, literally sitting right at 30. So heading into the FOMC, if there's a big disruption to the interpretation of what the Fed is looking for as far as timing of liftoff, and it gets kicked back, look for gold to mount some sort of rally. I would not be surprised to see gold back above 1100, maybe even to 1120, 1130. Would not be surprised. At the end of the day, it's a bearish trade, yes. Do I want to be bearish from here? No. Okay, if I get a rally, would I sell it? Yes. If we get a break below 1072, that would be bearish. You'd look for 1044, you'd look for the 2010 low, and inevitably, I do think you see 979, 973, but right now, I don't want to be on the short side of gold. Okay, so keep that in mind for any of you who are trading the commodity block. Crude, I think is a little bit different of a story. I do think you could get a spike lower here. 46.34 is going to be a nice 786 retracement. Even if you choke this up into a 764, I'm just going to do it for argument's sake. I did this yesterday. It shows you at the lows, and actually it matches up nicely with, almost matches up nicely with the lows here. The only thing is we broke these lows already for, what was that, June? Oh, April, I'm sorry. So I'm not really going to stress that low. Long story short, I think you can get another spike low here. Momentum is still in the oversold territory, so a little bit different of a picture for crude in general. But this is the level that you would need to get through to get back on the bullish side. And as I tweeted this chart yesterday, same thing. Bearish invalidation level and near-term resistance is right around that 50 mark, 49.80. A downside break, you look for the low day close, which is also the reversal day close, and that takes you to 44.66. So pretty clear levels here as far as crude and the commodities and gold are concerned. Very key levels that you want to keep in mind, specifically heading into the end of the month and heading into the event risk that we're about to see in tomorrow's FOMC interest rate decision. Quick look at the equity board real quick too. I just wanted to note yesterday's low in the S&P, the same median line structure we've been following since the start of the year. I mean, you can't make this stuff up. Right into that low, resistance near term, right into 2087, upper median line parallel from the descending one, right around there, 2085, 2087, major resistance or near-term resistance we want to look for on the S&P. We already stretched right into it and came off. Watch that heading into tomorrow's print. DAX, similar setup. Confluence resistance just higher. Okay, on this one, a basic retracement for the monthly range seems to be the way to go. And if you do that properly, you can see that we've already probed into the 618. Just some levels to keep in mind there for the DAX. All right. So we will end it there. If there are no other questions, we will pick things up tomorrow, FOMC day. I hope you guys get your trading hats ready because certainly will be the major last event risk into the end of the week, except for the GDP print from the United States. That's also going to be pretty big. As far as that's concerned, guys, so the U.S. GDP print is expected on Thursday, I believe. Annualized GDP on the 30th. Yeah, Thursday. And we're looking for advanced read for the second quarter of 2.5%. Remember, first quarter was dismal, right? We got a contraction of 0.2% in the first quarter. So this one's going to be pretty decent. And specifically, a lot of people are saying that, these are the numbers that the Fed is actually looking for the liftoff, are going to be the NFP numbers that come out the following week and the GDP numbers that we're getting at the end of this week. I happen to disagree. I happen to still think that the Fed's major concern right now is still inflation, because the dual mandate really, I think, the employment picture is essentially where they're looking for it to be. Whether true employment is at that employment rate or not is another topic, but that's another discussion. Mark McDowell, are you in the room? If you are, just want to let you know I got you all set up on Twitter. I appreciate that. And just want to give you some words of encouragement as well, guys. If you've had a couple of rough days trading, it's the environment that we're in. Again, I want you to be a little bit more nimble, lighten up your leverage. And as we get into the fresh new month, as we close out this month and close out the event risk at the end of this week, I think we'll have a lot more opportunities to open up real August trade, not the fake August one I was talking about earlier in the session. All right, guys, have a great trading session, and I will catch you guys all tomorrow morning, 8:30. Hopefully we'll have a lot more setups in play. Cheers.